Hi, folks. Today I'm going to talk about risks and rewards. Now, we've all heard that higher risks equal higher returns. While this is very, very broadly true, every financial instrument has some kind of risk involved. Therefore, it is important not just to focus on the higher returns of that saying, but also understand the risks involved in the products. Let me take an example here. Let's say I'm a 30-year-old person. I have been working for the past 5, 6 years, but I've not saved anything. Now, I get 1 lakh as bonus. I have two options, and let me take two extreme options for this example. One is to invest in fixed deposits where I'm assured that I will get 7% at the end of 1 year. The other option is to invest in Bitcoin and to maybe get an upside of 50% at some point of time. I feel like I should invest in Bitcoin because I've not saved anything for all these years. Now I have a chance to take my 1 lakh to 1 lakh 50,000 rupees. Here the return seems to be higher, but the risk is that I may lose some or all of my money. How can I lose all my money? Let's say the exchange folds, I'm not allowed to make any withdrawal, which is a common scenario across many exchanges today when it comes to Bitcoin. How can I lose part of my money? I want to wait and get 50% return on the Bitcoin, but an emergency comes up. I need to take out this money. Today, the price of Bitcoin is 10% less than what I invested it. So I get back only 90% or 90,000 of the 1 lakh rupees that I invested. On the other hand, if I had invested in a fixed deposit, I would have got back the full principal that I made. And if I break it earlier, then they would have given me a reduced amount, not the 7,000 rupees or the 7% that I would have got at the end of 1 year, but maybe 3 or 4%. Now, does this mean that we don't invest in any risky product and we just stick to fixed deposits? No, that's not what I'm trying to say here. I'll give you another example. Let's say I'm that same 30-year-old person, but I have saved over the past 5, 6 years. First thing I did was build a corpus of 6 lakh rupees because I wanted to put away 6 months of my salary as an emergency corpus. I can use this money tomorrow if I lose my job, if I go on a sabbatical, or if some non-medical emergency comes up where I have to use this money. I also built 14 lakhs of savings in mutual funds. Now, today I got that 1 lakh bonus again. I have an opportunity to invest it. If I'm to invest this money into Bitcoin, and the possibility is that I will lose all the money, that is, I will lose the 1 lakh rupees that I invested, that means I will be losing 1 by 21 of my investments. Is that okay? Sounds a bit high. What if I invest only 50,000 rupees into Bitcoin and I put the other 50,000 into something else? That means I will be investing 1 by 41 of my entire saving. That might still seem acceptable to me. Let me take a risk. Let me understand this product. Let me see how it works out for it. In any case, I still have most of my investments in slightly more secure products, which is there. This is an extreme example that I've taken, but let's take another scenario. Let's say I have the opportunity to invest across various mutual funds. Today, I've invested only in India-focused mutual funds. Now, there's a lot of news coming out of the US. There's a chance that markets may fall there. Even today, the Nasdaq 100 stands quite high. But let's say that tomorrow the markets dip for whatever reason and I have an opportunity to invest. On one side, I'm scared because what if the US economy spirals down and I get stuck with that investment for a long time? On the other hand, the underlying portfolio of a Nasdaq 100 is companies like Amazon, Apple, Netflix, Microsoft, Snowflake, so many of the big and the brightest companies, the darlings of the stock market today, world across. Again, I can take the same approach. I've got 1 lakh rupees to invest. I already have 14 lakhs put into mutual funds. If I put an additional 20% of my mutual fund portfolio, that works out to 2.8 lakhs. Seems very high. Maybe I'll start with 10%, that is 1.4 lakhs. Maybe I'll start with 5%, which is 70,000 rupees. So out of my 1 lakh bonus, I'll put in 70,000. Now, even overall, for my savings, it means that I already have 20 lakhs. I'm putting 70,000 against US stocks. And in mutual funds, typically that you might not end up losing the entire amount. So the risk is also lower. So this is how I can look at any aspect of my portfolio today. When I compare the various products, I not only understand the returns that I can get from the product, but I can also understand the risks which are involved in it. Once I understand this, then I can take the first step of deciding whether I want to invest in that product or not. The second step probably would be to put a small amount if possible, see how things go, see whether I'm able to stomach the volatility, I'm able to understand the product, I'm able to track it and review it. And once I'm comfortable with this, I can add more. If I'm not comfortable, then I can exit. So I hope this video helps you in understanding risk and managing your investments better. If you have any queries, please do drop a comment or write into me and I'll be happy to get back to you. Thanks for watching.